Most traders get stopped out not because their strategy is wrong, but because they're fighting the market's intent. And that's what we call order flow. In this playbook episode, I'll be going through what is order flow, how to read order flow, how I use it in trading, common mistakes, and some live examples. So without further ado, here is how I read order flow step by step. Alright, welcome to episode 10 of the playbook. Forgot to put episode 9 in the thumbnail of the previous video, but we're gonna skip past that. And so, welcome to episode 10, order flow. So we're gonna be going through what is order flow, how to read order flow, how to use order flow, some examples, and common mistakes. And if you don't know, order flow is actually pretty simple to a certain extent, if you know your confluences. So it's actually pretty easy, man. But let's get into the video. So what is order flow? Order flow is just the direction of where price wants to go. So as you can tell, you have learned trends, right? Higher high, higher lower, higher high, higher low, higher high, higher low. That's the trend. Where in a bullish trend, that means order flow is bullish. If we were in a bearish trend, order flow is bearish. That's simple. Order flow is just where price is going right now. An analogy you can use, or whatever it's called, just think of it, order flow as a current, a river current. You can swim against it, but it will drain you. And it doesn't mean one candle up or down. It means the consistent effort of buyers and sellers over time. So as you can see, buyers are consistently buying. Order flow is bullish. Sellers are consistently selling. Order flow is bearish. But we're gonna get more in depth with this by using our confluences that we've learned, like liquidity, break of structure, fair value gaps, and all that. Alright, so now, how do we read order flow? Firstly, you can use a break of structure. Because I mainly trade on the 5-minute time frame and the 1-minute time frame, I use time frames up to the 4-hour. As you can tell, the 4-hour is bullish. And sometimes I like to zoom in to right now, what are we doing? So order flow is bullish. Why? We had a break of structure to the upside. After breaking structure to the downside to make this 1-hour bearish trend, then we had a break of structure to the upside to continue this bullish trend. And after knowing the 4-hour time frame order flow, you can zoom into the 1-hour. Oh look, we're in a bearish order flow right now. Why? We just broke structure to the downside on the hourly time frame. And why order flow is so important, especially when used in different time frames, is when you align all the time frames to get the same order flow, your trade is likely gonna play out, bro. I'm not even joking about this. I don't have trades that I took because I haven't traded in like the past week. But let's say on the 4-hour, we are bearish. This is just an example. We are not. But let's say we were bearish. Then we zoom into the 1-hour. We are bearish. On the 15-minute, we are bearish. And on the 5-minute, we are bearish. And then if we get a liquidity sweep like right here, and a 5-minute retrace like what you learned, zoom into the 1-minute. After you get the 5-minute retrace, why we broke structure to the upside right here. If we were we broke structure to the upside right here. And now we're just simply waiting for a break of structure to the downside for order flow to turn bearish. You would have gotten stopped out if you did, but let's say the break of structure is right here and your stop loss is there. You can target whatever lows. But that's how order flow works. If you can align the different time frames, ES is way better today. It's not as good. It's not good, but it is better right here. You can use this as a simple order flow. You had a bullish fair value gap. We inverse the bullish fair value gap. Now order flow is bearish. You could have put your stops at the high and target whatever lows after we inverse this bullish fair value gap. And one thing I forgot to mention last video, I didn't forget to mention, but because we haven't learned order flow, there's another way you can use the 5-minute retrace. It doesn't necessarily have to be a break of structure. Alright, we're gonna be using an example from this market open. So this was 25th, 27th. Alright, let's use the 25th July trading day. 25th July. Okay, so right here, what were we doing? With order flow, as you can tell, was bearish. It is so bearish you can tell off the bat. The trend is bearish. High, lower high, low, lower low. So order flow was bearish. Next, we got an area of liquidity right here, hourly low. We swept that hourly low. What happens? We broke structure to the upside after a sweep. This is a sign for potential reversal. That's why we use order flow. After sweeping the low, order flow flipped bullish on the 5-minute. After looking at the hourly trend, it was definitely down. As you can tell, the hourly trend was bearish. We swept liquidity, order flow flipped bearish firstly on the 5-minute time frame because the 5-minute coincides with the hourly and the 4-hourly time frame. That's why I trade on the 5-minute and the 1-minute. The 5-minute flipped bullish. Therefore, order flow is bullish. As you can tell, order flow is bullish. I'm not gonna get into the 5-minute retrace. We already got through that last lesson. So now you can also use liquidity sweeps as order flow recognition, because as you can tell, we were in a downtrend. We swept liquidity. Now order flow flipped bullish. You can trade off this, man, and I would have if I didn't miss my entry. Right here, we swept liquidity from a bullish order flow and we became bearish. Alright, it's that simple. Order flow is just where the market is heading. You can use trends for this. Here, bullish order flow. Here, consolidation. Here, bearish order flow. Simple. The thing I like to use most with order flow to confirm it is break of structures or inverse fair value gaps. Like right here, we probably had a mini 1-minute trend. 1-minute order flow that was bullish on this 5-minute legs up. And then we inverse fair value gap, inverse this fair value gap, order flow bearish. Took out liquidity, flipped bullish, break of structure. We also had a break of structure right here. So use break of structure, use liquidity, and use inverse fair value gap. Basically, you just need to see what is respected and what isn't. If a bearish confluence gets respected, order flow is still bearish. If a bullish confluence gets disrespected, order flow is likely to flip bearish. That's easy. Alright, now how do you use it in trading? Like I said, you only need those three to determine order flow first. Order flow is bearish. Alright, we had lows marked out. Swept those lows. Now we want to see price react off those lows. As you can tell, it did. Now what are we waiting? 5-minute order flow to flip bullish, because we want to trade reversals. We flipped bullish when we what's this called, man? Break structure to the upside right here. Next, 5-minute retrace, what you learned last time. Man, where is that shit? Zoom in to the 1-minute. Wait for order flow to flip bearish right here. Alright, this is a valid 5-minute retrace. Now we want to wait for price to flip bullish. We want order flow to become bullish again so we can trade off it. Right here, break of structure. This is some random trade, by the way. I don't even know what happened to this day. Looks pretty choppy, but I'm just gonna work with it. We flip bullish when we broke structure back to the upside on the 1 minute. So that tells us the 5 minute is probably going to want to go higher too. Target whatever highs you want to target. Maybe Asia highs. Oh, look at that. We didn't get stopped out. Full TP got hit. This is how order flow works. And some of you may disagree with me that this isn't order flow, this is just market structure. I don't care what it's called, man. I'm just gonna use the term order flow just because it's what I know of it. It may be called a different name and it may mean something different to other people, but this is just how I know it and how I learned it. Let's see. Let's use an ES for a while, man. Alright, let's use this as an example. Order flow was bearish, and then it became bullish for a while, and then it became bearish again. What are we doing? Waiting for a sweep of a higher time frame low. We swap liquidity. Now what do? We are waiting for order flow to flip bullish so we can trade off it. Up and a down candle, that is your break of structure. So order flow is bullish. Now what do? We wait for market to open at 9:30. Some of you don't know this, but this is New York Open 9:30. I'll make a video on that. Now we are waiting for a 5-minute retrace. Bullish fair value gap. 5-minute retrace into the bullish fair value gap. What do? We zoom in. After we zoomed in, we have to confirm that it's a valid 5-minute retrace. How do we do that? By waiting for order flow to flip bearish. Right here. Down in an up candle. Break of structure. After we confirm that it's a valid 5-minute retrace, what do? We wait for order flow to flip bullish again. Up and a down candle. That's a high. We closed above the high. We got a break of structure. Candle closed. Put your stop at the lows. Target whatever highs you want. Look at that. Could have went all the way, man. Probably not. Oh wait, you could have. Would have been a long trade, but you get what I mean. This is order flow. This is the power of order flow. Use it now. Use it. Alright, I believe that's enough example because this shouldn't take too long for you to understand, man. It's really simple. Use break of structure. Use inverse fair value gap. Just use the confluences, man. If it gets respected, the order flow remains the same. If it gets disrespected, order flow is flipped. Look at the higher time frame order flow. Pair them with the lower time frames. So use the 1 hour, the 5 minute, and the 1 minute. 5-minute retrace to verify it. Wait for order flow to flip from whatever direction you want to trade from. After that, wait for order flow to flip back to the direction you want to trade from, and then enter the trade. Simple. Now, we've done this, and examples. Now, common mistakes. You don't want to mistake pullbacks for reversals, because a pullback can look like, let me give you an example. Honestly, right here, this is a pullback, but order flow is still bullish. That's why we have to look at the 4-hour time frame too. Did order flow flip bearish here? No. This is just a pullback to fill this weekly opening gap to go higher. Now we might flip bearish, but that's for time to tell, and we don't care about that. That's why we gotta use the higher time frame to make sure that it's not just a pullback and it's actually a reversal. Align all of these time frames and their order flow to make sure you get the best out of your trade. That is very simple. Like right here, this was just a pullback. right? But I bet you on the 1 hour, it's probably looking like an hourly downtrend. Let me mark this out, man. As you can tell, right here, order flow is actually bearish on the hourly time frame. That's why. But what did price do? We went higher because the higher time frame holds higher power. 4-hour time frame tells us the order flow was bullish. The hourly just had a pullback on the 4-hour time frame. That's why it looked like order flow was bearish. But in actual fact, price still went higher. Alrighty. Alright, next. Don't chase trades against order flow. If the order flow is telling you it's bullish, just trade bullish. Be bullish on the day. Align them. Let them tell you where price wants to head. Trade on the day. You'll be dumb if you take trades like on this bearish order flow. If you take longs, you're not gonna get anywhere, bro. That's why if order flow is telling you it's bearish, trade bearish. If it's telling you it's bullish, trade bullish. It's simple. Now, if you trade reversals like me, you gotta wait for structure to flip before changing your bias. Because although I trade reversals, sometimes it could be continuation and the liquidity sweep could turn into a liquidity run. That's why you gotta wait for order flow to tell you that we're fully flipped. And I use that by using 5-minute time frame and using break of structure, inverse fair value gaps, or whatever confluence you want to use. If it's being respected, it means that it's a continuation. But after we sweep liquidity and order flow on the 5-minute flipped bearish or bullish, depending on where you're trading. Let's say you want to go for longs. Let's say we swept liquidity right here. Alright, we swept liquidity right here. You want to go for shorts because you're a reversal trader like me. We don't want to just randomly take a trade. Make sure order flow has flipped bearish before we do. Break structure. This is probably not the most solid trading, but it's because it's just for example's sake, but we did, I believe we did, pull back into this equilibrium, so you could have traded off to equilibrium right here. But this is just for example's sake, don't care about that. If it was for real trading, I would have zoomed into the 5-minute and 1-minute, but that would take too much work and too much time for you guys to wait. So yeah, wait for structure to flip before changing your bias. Confirm that it's a sweep before taking a trade from the sweep. Before trading a... Wait, hold on, I'm confusing myself, bro. Confirm that it's a liquidity run, like a continuation, before you trade continuation of the trend. Confirm that it's a reversal, like right here. This was probably a good day, bro. Swept this low. In fact, we swept this low. We could have confirmed order flow became bullish right here on the hourly, and then we continued higher. Confirm that it's a sweep, man. Use the 5-minute break of structure. It's simple, bro. Don't confuse yourself. Don't overcomplicate this shit, bro. Anyways, this video is only 20 minutes. It's probably gonna be shorter because I'm gonna edit it. This is all there is to order flow. Heck, if you can't even tell where the trend is, use this trend line, bro. We're going higher. Jeez. Y'all be thinking too much. Anyways, I hope you enjoyed this video. If you did, like and subscribe. If you didn't, like and subscribe. If you learned something from this video, like and subscribe. If you didn't, like and subscribe. Hope you enjoyed this video. I really hope you learned something from it. When you have the time, or in fact, I don't even care if you have the time, just go ahead and determine order flow from your charts right now, bro. Like after this video, if you're watching, go ahead and find bullish order flow, bearish order flow. Make sure, and if you want to look for liquidity sweeps, make sure that if you're trading the 1 hour and the 5-minute and the 1 minute like I do, make sure on the 5-minute order flow has flipped bearish and see what price does. This is how you gain market experience, by watching the charts every market open. Even though it means you're not taking a trade, you're still gaining experience from it. That's why I watch the charts, even though I know I'm not going to be trading sometimes. But sometimes I completely avoid the day because I don't want to get stuck in a bad trade. So anyways, order flow is just where price wants to go. It's that simple, bro. It's what I look at before trading because I want to make sure that it's in my favor. So just simply ask yourself, where is the market gonna go? Where is the market going? And find your order flow from there, bro. Anyways, I hope you enjoyed this video. Once again, like and subscribe. I won't be posting it. Wait, hold up. This video is getting released on the weekend, so that's fine. Anyways, I'll see you guys next time. Bye bye. See you.